How are you now? It's James Whelan here, and you are listening to the Theory of Thing Investment Podcast. I am the Managing Director of Barclay Pearce Capital's asset management team, putting out amazing, great deals and wealth management services through whatever you need at the right price. I am also joined here by Heath Moss. How are you now? Heath Moss of HLM Investments. Let's pep it up a bit. It's been a great week. Banging on the 17th of May, 2024. I'm going to go first. We did a capital raise for Impact Minerals. Happy to announce we managed to get the amount that we were looking for, $3 million to a wonderful company making HPA, or so on its way to digging stuff out to proving that they can make highly purified alumina. It's been an exhausting week, mate. There's a few things you don't want to see get made: laws, sausages, corporate deals. Heath, mate, how are you going?
Yeah, good, mate. Yeah, it's been a big week, hasn't it? I've personally been dealing with a couple of sick kids and a lot of work. A lot of work on my desk this week. They all decided to pile up at once, so it's been a very busy one, and markets have been very, very nice. So
Yeah,
it's been good all round.
mate, I reckon your kids are always sick.
Oh,
I reckon your kids are sicker than they're not.
It's just the way things are. They go to school, they pick up a bloody bug and bring it home, and it's just not good, not good. And then
what I love, more, yeah.
We try and avoid it all, try and quarantine them, but it never works. I'll eventually get it.
Doesn't. No, it's what blew me away was preschool paying all that money so that your kid could just get sick 3 times a month.
Yeah, I walk
into sick, and then they can't go.
Yeah, I walk into their classrooms in the morning, and it's just like a booger and snot fest. You know, there's always kids in there with runny noses and coughs, and it's like, just keep your kids home.
Snotfest 2024 is on. Oh, it was also my birthday.
Oh yeah, it's happy birthday.
Snotfest. It was my birthday on Monday. Oh,
yeah, 21 again.
43. Now, this is the big thing is I wasn't supposed to go past 42. 42 was always my top number. I've got no problem telling people that I've only been living until 42 was going to be it. Made my peace, made my money, family, fantastic. If anything was happening to me, that's it. So now I'm in good shape, competing at a national level in a sport that I love and running this wealth management firm. It's all good. It was just I'm happy to say that that's it. So now I'm just like, you know what, let's keep going. Let's see how this goes. It's all going pretty well, especially after this. I mean, this week is sensational. Proved that we could do the thing that we set out to do. This team will never lose again is the motto that I've got here for the crew at Barclay Pearce Capital's wealth management crew, and we didn't. We got it done. Thanks to us and our joint lead manager partner that was in on it with us. They did a stellar job, just amazing. Anyway, it just keeps happening. It keeps working. So I'm good to keep on going now through 43 and see how long this roller coaster goes for, because it's a hell of a thing now. And I'm loving it, mate. Every second of it, I'm loving it. Even when I'm hating it, I'm still loving it. Yeah,
excellent to hear. Life's good. Beautiful.
Life is good. People are amazing.
Should we get stuck into it?
Always with the business you are. Just go straight. Go on then. Tell us about your markets then, fancy boy.
Fancy
boy stock markets.
Oh God, let me bring up my screen again. There
what
we
do you
go.
got for us?
Beautiful. So there we go.
Like
we
see S&P
S&P 500, Nasdaq, Dow Jones, S&P 500 all cracked new highs this week. Off a little bit last night, but you can see that new high right there on that candle right there. Been a great week for markets. We've had a continuing theme of softer US data. Well, softer than expected US data. It's none of the data is too worrying at the moment, but it's coming. The surprises to the upside are now not happening. They're actually surprises to the downside. So this week we had several bits of data out. We had PPI that came in hotter than expected, but the revisions for last month were quite substantial, so it was net neutral. CPI headline came in a little bit softer than expected in the US. Core was bang on what they expected, and the markets really like that because the last 6 months it's been hotter than expected. So the market, I think, was a little bit relieved that CPI is finally looks like it's under control again. We had the New York and Philly manufacturing surveys, which were softer than expected. And I think continuous jobless claims, initial jobless claims last night were a little bit higher than expected. So that's where the market's been. And again, we're rallying on the back of, this means probably we were not going to get, we're definitely not going to get rate hikes, that's for sure. And rate cuts are starting to be factored back into the market as well. So that's there's two definitely factored in by the end of this year. Now it was about 1.7 factored in.
It was
so
1.5.
now.
Yeah.
So I'll just bring up the 10-year. You can see the yield here.
We're sponsored by. We're sponsored by Wakey
Wakey.
An amazing Wakey Wakey. Thank you very much to the sponsors. A great product by Wellnex. It'll wake you up.
Yep, I get their adverts all over my Facebook feed because we're talking about them in our WhatsApp groups now. So, Chemist Warehouse and Wakey. That's all I'm getting at the moment. But okay. So you can see the 10-year there. The 10-year hit a high of 4.7 a couple of weeks ago. It's now down about 4.4%. 2-year much the same. The US dollar, that's been the big one too. A big pullback in the US dollar there was 106.5 on the Dixie.
This has been. I think that I have, without trading it at all, I have picked this to perfection. I mean, it's an entirely different thing. It's just like, you look at it, you just like, dollar's too high, and it's dollar's too low. Picking it, so it's like, Jimmy, you got a trade on? No, I don't have a trade on. If I had a trade on, I would not be picking it so well. But that's such is the way that it goes. But it's been running some sort of. It's a formulaic thing. I can sort of see the lines that you need to be drawing to get that done.
Yeah.
There you go.
I should have a line straight across there. Yeah. So we're seeing that.
Break down.
Yeah, so do I. Just as those rate expectations continue to, those cut expectations continue to rise, I think the US dollar comes down. Because remember, this is the Dixie. This is an basket versus the euro, which makes up half of it. The pound, the yen, etc. So that's the US dollar. Let's talk copper.
Let's talk copper.
Copper. Look at that. That's
just
beautiful.
My
fantastic. I mean, hit a new high the other day.
That's crazy.
New high.
You got news on that? What's the news on that?
Oh, look. I couldn't find anything definitive. It's just more about a culmination of, supply restrictions. We're continuing to see mines miss production targets or shut down. Head grades are coming down. I had a look at, I saw a chart the other day. Head grade 20 years ago was around 1% globally for copper. It's now at 0.53%. So you're going to dig up twice as much dirt to get the same amount of copper you did 20 years ago. And that's obviously going to increase costs, all in sustaining costs, which means the base for copper should theoretically, the base price for copper should be higher. And we're starting to see that reflected now. We all know about Chinese smelter stuff. There's been stuff in South Korea as well. And the demand, I mean, obviously we all know about the decarbonisation, the greening of our infrastructure, etc. It all comes back to copper. Without copper, we can't do it. So that's where it's at, and we're starting to finally see the copper price react to all that. Like I said, hit it $5.12 a pound the other day. It has pulled back to about $5.90 at the moment, but still looking very, very strong. And you can see why BHP are happy to pay $60 billion to try and get Anglo over there with their copper assets, and that which would make BHP the largest copper producer on the globe. So. Yeah, so that's copper. You got anything else?
How do you feel about that? I haven't asked you. How do you feel about the Anglo bid?
I like it. I think the copper assets are high quality assets, and the coal assets too. Which, I mean, it depends how this goes down. Anglo are trying to separate out some of their diamond and PGM assets and stuff like that, and maybe their coal assets as well, which are high quality and in Australia as well. And it seems like BHP want them. So it just depends. I mean, I don't think Anglo really want to be taken over down here because their share price is down substantially from where it was a couple of years ago.
Well, they had the chance.
Yeah, but I mean, it'll be up to the shareholders in the end. I mean, if BHP offer a decent enough premium, because I think it started at around 20 $26 or £26 per share. The offer, the equivalent, is now up to about 34, I think. So BHP really want it, and I don't think they're going to back off. I think they want it. These substantially change BHP's copper profile and the globe's copper profile as well. So I like it. I mean, it's going to be a little bit messy for shareholders in BHP to start with, as most script bids are, because there's with dilution in there. People aren't sure how the companies will merge, etc. I think it's a good move, especially if you. I mean, we all know copper. Everyone's hot on copper, so there really aren't any other tier one assets out there for them to buy or make. I mean, they've got their own stuff, like they're expanding Olympic Dam. They have their other copper project. I think it's Oak something. I can't remember the name of their new copper project, which is just south of Olympic Dam and maybe as big as Olympic Dam.
I've heard something about this. Anyway,
so I'm for it. I'm all good for it.
Speaking of copper, China, the number of 13Fs that have dropped this week for substantial funds that have shown that there has been a huge inflow into Chinese stocks. I mean, if you just look at BABA on that one, you can see there's big David Tepper's fund, and a few of the other big ones as well have shown that some of their really some big holdings that have come in. BABA has just come out of the box there, and that's Alibaba. So that's the US holding of Alibaba.
Yep.
Not the China A shares. China A shares, or are they in Hong Kong? Just trying to think. I can't remember. It's been ages since I did that. Yep. Phenomenal.
Yep.
What's going on there, and amazingly, just some people that were in the know very close to me a couple of months ago. Actually, it was just saying China is a great contrary call right now. If you can pick and choose the bits and pieces that you want to have, then it's there. I'd be happy to. I mean, I've been happy to be allocated to China on those massive dips. Every time you look at it, it seems like amazing value. Every time I think it seems like amazing value, I'm wrong. And
look how far
it's not going to say anything on this one. Yeah.
Look at that. Oh, it was
look at that.
Where was it? $350 a share, and it's now 86. And it does look like
that was peak Chinese craziness.
Yeah. It looks like it's breaking out of a base there. Around $100 is your next test. But yeah, you got better macro data in China now. That's coming through better. NFL Mondays, or was it Sundays?
They've announced Monday Night Football.
And you're also getting decent earnings reports out of these companies. They're all reporting earnings over the last week or so. Tencent, Baidu, Baba, etc. And they've all been really good reports. I was at a Alan Gray investment forum yesterday, and
they're always good.
Yeah, the food was phenomenal, and the presentation was just as good. But they listed China as one of their economies and markets that are looking quite good value down here. If you're happy to take on the risk, they had it as a value play. Actually, they had most things outside of X in the US a value play. So yeah,
what do I got here? There you go.
So yeah, that's
President Xi. So has done some AI moves on President Xi to make him look like Giga Chad on there with those 13Fs dropping.
Give me 2 seconds. I'll bring up. Speaking of AI and all those things, what chart's this? It's GameStop.
I'm going to put you back up on the screen.
It's there. GameStop.
Oh my God! Look at that.
Roaring Kitty is back.
Roaring Kitty is back, baby. And we are so happy that he's back as well. We are so back. So much so. Hang on, I'm just going to show you mine. There you go. Welcome back, Diamond Hands. How was the moon?
Fantastic.
Back to your job, stocking shelves.
Are they your typical crypto / meme stock holders, are
they? Mate, I'm a big fan of the crypto. Huge fan of the crypto.
Beautiful.
Had a
Beautiful
launch for a group that I could consult to. No, I won't go into that. Now, where are we? Where were we?
This
is one that I've got here. S&P 500 stocks above their 200-day average is now at, and I had this, 80% of S&P 500 stocks are now trading above their 200-day moving average. That is the highest level, almost the highest level since September 2021. Going back to that level again. It is deeply high. And if you sort of have a look, I don't know if you want to pull it up, but I don't want to have too many bits and pieces on this show. But it's trading. The fact that S&P numbers are always good because they show that the S&P 500 is trading sort of well and truly above its PE average. It's 5 and 10 year price to earnings average. It's fairly significantly higher than that average.
Yeah, forward PE on the S&P 500 is about 20.5 times, and I think the 10-year average is around the 17.5. 5 years around about the 18.5. So I think that's what their latest stats have said. But it's also good news seeing that amount of stocks across their 200-day. It means the breadth of the market has improved outside of the Mag 7 or those top stocks that were doing all that heavy lifting towards the end of last year. It means that this rally has broadened out and is probably a little bit more healthier and less sort of bubbly. I mean, even though I'm not calling a bubble, it's just takes away that threat. So yeah, I like it that it's broadened out so much, and it could keep them going. Still, by the looks of that chart, it was above that 80 point for some time back in 21. So what is it? The markets can remain rational longer than you can remain solvent. So just keep that in mind.
Yeah.
Did you want to talk BOFA? BOFA?
Mate, I got the BOFA. What are we doing now? I've got the Fund Manager Survey. Let's just have a quick look through it. I actually haven't had 1,000 years to go through this, but I'm just going to go through it right now with you. This is the BOFA Global Fund Manager Survey. Let's have a little sneaky peek. Let's delve into it together and see what we've got here. Is that on the screen now?
Yep.
Hello? Yep.
BOFA
the most bullish fund manager survey since November 2021, driven by optimism on rate cuts rather than earnings per share. 8 out of 10 say cuts in the second half and no recession. Fund manager survey cash levels down to 4%. Oh, that is a bearish indicator. That's a 3-year low. Stock allocation is the highest since January 22. Oh, that's also a bearish indicator. Sentiment not at close eyes and sell levels. Something's going on out there. But risk assets are vulnerable to more evidence of stagflation. Inflation up, growth down. So it's bullish. It's crazy bullish. The most crowded trade. This is what I like.
7.
I always go down to the most crowded trade is the 7. The higher inflation, still the biggest tail risk. Over there, 4%. It's about the same. The long, the Magnificent 7 is the most crowded trade. What do you think is currently the most crowded trade? Long Magnificent 7. May, April, March have shown it's significantly beating everything by 1,000%. May actually, just out of the box, long US dollar came in, showing that and this survey would have been done about a week or two ago. That's when the dollar started to turn. That's when everyone was just like, okay, that makes sense.
Go back up to the what do you call it? The most trade. Look at the number 3, short Chinese equities. So it looks like that's starting to improve, but there's less short on Chinese equities. Which means which would explain why some of these Chinese stocks are starting to improve.
Fund manager survey, most overweight stocks since January 22. Fair enough. Okay, they are. It's a bullish fund manager survey. The most underweight real estate. Oh, this could be a buying signal. Equity allocation, retail stock allocation levels. Let me see. Yeah, good. Nothing else that's really in there. Cash. May rotation into cash, staples, bonds, out of REITs, industrials, and the Eurozone as well. Cash, staples, and bonds getting a bit there.
I think this time last year, we were talking about cash levels being around 6%, which was quite high. Actually, no, I think they might have got to 8%, actually, at their most. and they're down at 4%. So quite low levels of cash there, which obviously everyone is looking for that return. If you're not in it, you're going to underperform by the looks of it.
Yeah, long the Magnificent Seven has been so that moved from Big Tech in April 23 to now it's just called the Magnificent Seven. That has been since April 23. That has been the most trade, far and away. Okay, there is the Fund Manager Survey.
Beautiful,
Heath. Let's do some footy tips. And then what else are we going to talk about?
I think I'm done. Oh, actually, just a bit of a cautionary tale on the ASX this week. Actually, we've seen about doing business in Africa for investors out there. We've had two companies, little mining companies this week with cautionary tales. Leo Lithium have one of the biggest lithium mines in the world. They're starting to produce now in Mali. They've basically been forced out by the Mali government. They had 40% of that project, and they're getting a paltry $300 million for that. So they're probably lucky to walk away with anything. They've been suspended for about a year, I think. But yeah, that's just been terrible shit fight there with the Mali government. And AVZ Minerals. I mean, this one's been popular on Hot Copper, etc. Have now delisted themselves from the ASX. They've got that very large lithium project. Very large project in the Congo. They haven't gone belly up or anything. They're just delisting themselves from the ASX. So that's 2 years.
Just don't want the heat. Wow.
Yep. And the common theme with both of them. Common theme with both of them. A, in Africa. B, Chinese involvement. There is Chinese involvement on both sides with the Leo Lithium, with Ganfeng, and with AVZ and another Chinese partner. I can't remember their name. So the Chinese have a lot of influence over there in Africa, and just caution for those Australian investors out there looking at those stocks with the African assets. They trade at a discount for a reason. So
if you listen, it's best just to stay away from all of that completely and get involved in some high purity alumina out of Western Australia. Stick with the team that you know. Stick with the team that you trust. That's general advice only, obviously. But back on Impact. Impact Minerals is fantastic. Australian company.
Yep.
I'm not looking around there. However, thank you very much for that cautionary trail. Sovereignty risk, man, is just going to be a thing. Now, we had dinner last night. Thanks to the Inside Network, invited us to dinner with Yarra Capital. I sat next. They for some reason, even though I was just completely exhausted, completely fried, James Dunn put me next to Dion, who's the CIO of Yarra, and we had a good old chat. It's the ex Goldman Sachs team, and he amazingly said Dion used to. He was actually at Fidelity with Peter Lynch. That I can't imagine a better. Imagine having a better tutor for your early days. Your earliest days through there. He's just a gun, an absolute gun. Peter Lynch, One Up on Wall Street was the first book I was given when I started in broking, because I'd sort of come from a different direction to come in, and so I wasn't like those kids that have been trading stocks when they were 12 or any of this sort of thing. It was never really my thing, which is sort of why I don't have the passion for the trading. I've got more of the passion for the broking, running the things and organizing things and making sure that people are compliant and things like that. Trading stocks is another man's game. Anyway, so yeah, Dion was an amazing guy, great thing, super bullish on copper if he was going to choose, and he mentioned sovereignty risk as well. And he actually mentioned sovereignty risk on lithium too, which is funny, probably because of what happened over the last couple of days. But just talking about it's the hardest to find. Sorry. It's the easiest to find. It's the hardest to find really good stuff, and wherever it is always an awful place to do business. So,
exactly,
keep that in mind. Western Australia is not an awful place to do business, and down south near a little place called Norseman, there's a mud lake called Lake Hope, and in that mud, you can take that mud and you can you do some chemical stuff to it, and you turn it into 99.99% pure aluminum,
HPN,
and then you use that in your LEDs, and you use that in your batteries to separate cathodes and anodes so that your phones don't blow up. Anyway, Impact Minerals. Fantastic. I know more about HPA than I did this time last year, and the learning that I've got. All right, footy tips, mate. Hit me. I got Gold Coast last night up at Darwin. That was hot as hell.
It was.
What do you got?
Gold Coast were hot last night. My tips last week were terrible. Shameful. They were absolutely terrible last week. Yeah, hang my head. But this week I'm going to redeem myself.
You better.
I'm going to redeem myself. What do we got here? Melbourne to cover the line versus West Coast over in the West. The line's only 26.5. I thought that was quite low. Pound $1.90. I like that. West Coast have injuries now to key players as well, so I think they'll struggle. But yeah, so that's my bet of the week.
I can't believe someone's actually given a line there. You reckon West Coast, Melbourne's going to cover that line? I got 26.5. 29.
I got 26.5. Oh, okay, so it's gone up. So yeah,
that since you said it,
I think they'll win by 7 or 8 goals. So you got a little bit of wiggle room there.
Good, mate. That's smashing. Okay, I got an NRL. Let me just whip out an NRL one for you. Okay, so that'll pay about $1.90, which is great, as it would stand it to. Now, here's the thing. I'm just going to mention this. It's Magic Round this week, and I've said all year that I'm going to be going to Magic Round. And now we get to the stage and I'm just like, you know what? I actually feel like I want to stay home. I'm not going to get on a plane and go up there. I've got people who are up there going, Jimmy, we'll get you the seat. We'll get you the box. We'll get you the tickets. We'll get you whatever you're going to have. And I'm just like, no, I don't want to go to Brisbane for Magic Round this week. I just said, well, I'm just going to sit on the TV and watch it with my family because I've been moving around so much and I'm done. I'm absolutely spent. However, this week, all the NRL games up in Brisbane, nothing else going on. So with that in mind, let's have a look at the AFL schedule. EFL schedule. It's Magic Round. There's nothing else going on. This is the Sunday schedule for AFL. Essendon paying $1.05 versus North Melbourne paying $10.50. Now I'm only giving you the odds to show you what sort of games these are going to be. So that's Essendon to absolutely beat the living daylights out of North Melbourne. Port Adelaide paying $1.13 versus Hawthorn paying $6. That's going to be a thrashing. And you got West Coast paying $5.10 against Melbourne paying $1.17. It's going to be 3 one-sided absolute demolition derbies.
Yep.
And that's Sunday. That's what you have. That's what you're competing with for Magic Round. That's the AFL's best Sunday they could possibly put up.
I think they've done that on purpose. I think they know they can't compete with Magic Round on Sunday.
Garbage time on Sunday. Garbage time on Sunday.
They've thrown up some rubbish and said, Ariel, you can have it.
Yeah. So for people who don't understand how odds work, and we've got a lot of American listeners, they don't. If you put $1,000 on West Coast, it means you'll lose $1,000. So, suck it, Eagles. All right, mate. I like the Knights. I still like the Knights. And because everything's in Brisbane, there's no real home ground advantage that's going on. I Dolphins as well. Yeah, mate. Okay, look, I like the Knights. Take the Knights. Take the Roosters. Okay, Knights into Roosters. That's a good one. Knights into Roosters all day. Outright, put them on the nose. That'll pay you about $2.40. Add yours in as well. You get a couple of bucks there. Or if you think that Heath is completely off res, stay well clear of his tips and stick with old Jimmy Two Thumbs, who'll always make you bank. Bet with your head not over it. This is not a gambling podcast. Now, next week we have someone from the NFL joining us, a good friend of mine from Las Vegas that I met when I was out there. He heads up the logistics. We're going to ask him everything about the Vegas Raiders. We're going to ask him everything that we can ask him about moving the team, the draft, everything that happens now through the offseason and going into it now. They've announced their schedules, and I am super stoked about that. Anyway, look, that's it. That's all I got for you, baby. We're about 8 minutes over time. I don't care. It's my podcast. I'll do what I want. Heath Moss of HLM Investments, thanks for joining us.
Thanks for having me, and have a good week, everyone.
Mate, fantastic. Thank you very much to Wakey for keeping us a wakey wherever you are, 332-8888. I'm James Whelan, Managing Director of Barclay Pearce Capital's Wealth Management Team. I've got to explain to my marketing department why this microphone stand is now broken and see if this microphone works. That's probably going to be coming out of my end. Thank you very much for all of the help and everyone who helped me out getting the Impact Minerals placement done as well. That was fantastic. Fun times here at Ridgemont High. Have yourself a good one. Stay safe for this weekend, everyone, and I'll catch you all next time.